Okay, students, we're back, and I ended last time talking about or kind of introducing the topic of codification. Now, in 2009, the FASB implemented um, Financial Accounting Standards Codification. This was a wonderful thing. It changed the issuing of future standards from being statements of financial accounting standards to accounting standards updates, or ASUs. Now, ASUs are issued by the FASB, and they become part of codified GAAP. Now, what the codification project did was take all of GAAP and summarize it into one cohesive set of standards. Now, before the codification process, there was actually what was called the hierarchy of GAAP. And so issue standards, statements of financial accounting standards were the highest level of GAAP, and then below that you got into the APB opinions, and it just kind of moved down in a systematic way like that of picking up different ways that accounting standards kind of became generally accepted. And so what you had to do when we were out on audits back in my day was we would carry this whole set of accounting literature. When we got to an issue that was difficult to handle, or we weren't sure exactly how to handle it, you had to start going through the hierarchy of GAAP, trying to find where it had been dealt with at the highest level. Just very cumbersome, very complicated. Now you just go to codified GAAP, and that sets out one single set of accounting standards for how things are accounted. Now, they talk a little bit about GAAP here. You can go to FASB.org. MSU does have a login that students can use, and Dr. Patton has that, and I have it somewhere. I'm not sure where, but if you want to get into GAAP and you can't, into the codified GAAP, let me know, and I will try to find the login that you can use to access it. Now, they talk again here about the hierarchy of standard setting authority. So ultimate authority is with Congress. They have delegated it to the SEC. The SEC has delegated it to the private sector, where the Committee on Accounting Procedure, the Accounting Principles Board, and the Financial Accounting Standards Board have alternately been responsible for that. Now, they get into international standard setting. The International Accounting Standards Board is the group that currently sets international accounting standards, commonly referred to the IASB, where we have the FASB. And their goal was to create a single set of accounting standards that would be acceptable worldwide. Most companies do follow, or most countries do follow international GAAP, U.S. being an exception. And with the question, the goal originally was that the U.S. would converge our GAAP with international GAAP and then follow international GAAP. That has not happened. That is never going to happen. That's been recognized. And I knew that from the beginning, because in order to do that, Congress would have had to have given away power, and Congress doesn't give away power. They may delegate it, but they still hold on to the strings. And so if we converged U.S. GAAP into international GAAP and then said, okay, we're going to cease American U.S. GAAP and we are going to follow international GAAP, and Congress decided they didn't like something, they called the International Accounting Standards Board and said, we don't like that. We want you to do something different. And the International Accounting Standards Board say, we don't care what you like or don't like. Well, Congress isn't going to do that. So we'll move on down the Convergence project to converge U.S. GAAP and international GAAP actually began in 2008, and at the time their stated objective was full convergence by 2014. Obviously, we are 6 years beyond that. That's way in the rearview mirror, and we're not even close to a converged GAAP. And again, it has been widely accepted that that's just not going to happen. By the way, the big elephant in the room has not been addressed, and that's LIFO. International GAAP does not allow any form of LIFO, and most U.S. Merchandising companies use some form of LIFO. Okay, standard setting process. One thing you have to keep in mind is there are 7 members of the FASB, and in order to pass a standard, you have to get at least 4 of them to vote for it. So what happens whenever you have to get some sort of a majority? Well, there become negotiations. You may have 3 that really want a standard, and the three that don't, and the one in the middle. Now the group that wants it starts making changes to try and pull that one over. And so those negotiations sometimes result in some weird stuff and some less than perfect accounting theory being followed. So the reality is that standard setting is always going to have a political element to it. And so sometimes politics intrude on the standard setting process. So now one of the goals of standard setting is neutrality, that no special interest groups interest gets looked after more than others. But again, sometimes special interests manage to get their way. All right, right here they make the statement sometimes standards have changed, and sometimes has changed standards in response to that pressure. But the political pressure has resulted in changes in standards. Here they talk about Silicon Valley. The high-tech industry applied intense political pressure against a proposal, and eventually the FASB backed down and required only disclosure of options. That was about having to report a liability for options that is compensation to executives, and they only required notes. But then later, about 10 years later, FASB restudied the issue, and it wasn't such a hot button topic then, and they were able to pass it and require recognizing those as a liability. So enough about that. But don't ever forget that standards are not set in a vacuum, that it is a political process. Now, they talk a little bit here about private company GAAP. The GAAP we've been studying is public company GAAP. Private company, or sometimes called small company GAAP. Usually the main differences there are that new standards, usually there's longer implementation time for small companies than for SEC regulated companies. So talk a little bit about the role of the auditor. Now, never forget the financial statements belong to management of the company, and management is responsible for those. Now, the auditor exists to express an opinion on the financial statements, on whether the financial statements are in accordance with GAAP. They comply with financial accounting standards. So their power is in the opinion that they render. Now, will management give in to auditors' insistence? Yeah, they usually will, because they want a clean opinion. But technically, the financial statements belong to management, and management can issue whatever it wants. It's just got to worry about the audit opinion that will come. They talk about the unmodified audit report. You'll get into that in detail in auditing, and so I'm not going to cover it in any great detail here. Another thing to remember, CPAs are licensed by a state. So I am licensed by the state of Texas, as are most of the faculty. I lived in Louisiana there. I could have applied for what's called reciprocity to get my license there, but I never did bother because I wasn't practicing as a CPA there. So talk here a little bit about the Sarbanes-Oxley Act. You've probably heard of that. The actual name of the act is the Public Company Accounting Reform and Investor Protection Act of 2002. Again, commonly referred to as Sarbanes-Oxley, or sometimes just SOX, S-O-X. Now, it's named after Senator Paul Sarbanes, a Democrat from Maryland, who was the author of the bill in the Senate, and after Representative Michael Oxley, a Republican from Ohio, and he was the sponsor of the bill in the House, and so they were the joint authors of the ultimate bill. Now, Section 404 got a lot of attention when the bill first came into prominence and was passed, and that required documentation and testing of what were called key controls, but it did not define key controls. And so that became a very controversial issue. Companies didn't know what was required because they wouldn't, Congress wouldn't say anything other than key controls. So large companies spent on average about $8.5 million to implement Section 404 the first year and another $4.8 million the next year. About the time that it went into force in about 2003-2004 time frame, accounting firms were desperate for graduates. I was seeing graduates come out and they were getting signing bonuses like athletes get just to go to work for a CPA firm. It was pretty amazing. So that has kind of settled into place. The reality is that we seem to get one of these accounting controversies dealing with fraudulent financial reporting about every 25 years or so. And so we're coming up due for one in a few years. So during your careers, and maybe the early part of your careers, I'm going to predict there's going to be something like that happen. There will be a law, and your salaries will go up as a result of that because of the need for more accountants. And so you'll have some experience then and should be very valuable. That's what you want to do, is make yourself more valuable. Okay. Another thing that was discussed and got a lot of airplay back then was U.S. standards had always been very rule-based. You know, there are very specific rules. You know, if this and this and this is true, then you handle it this way. And if, you know, that's not true, then you handle it this way. And we've covered a lot of those things where you get into that. Think about things like when you recognize a gain in with a trade of one productive asset for another. You know, there's a lot of specific rules, and that's a rule-based standard system. Now, a lot of people argued that we should get away from the rule-based standards and go to a principles-based or objectives-oriented standard system, where instead of saying, here are the rules, and if these are in play, then you do it this way, and if you do this, then you do it this way, instead just say, well, generally speaking, you should handle things in this broad way. You know, if these broad concepts are present, you should follow this method. Now, a lot of people believe that's a better approach and it will lead to less fraud. I am far from convinced about that. My time is up. I'll start with that on the next video.